Hi all, this is a review of my IOTA dollar cryptocurrency sell trade I took recently. So the logic for this was on the 4 hourly. On the 4 hourly for this pair, I had expected buyers around this area. Once I saw this reaction by buyers, I had expected buyers to push it all the way back up to this zone, and that's why I marked it with the big blue rectangle when price was around here. So and once I saw these buyers come up in a more choppy way than these sells down, I got interested for a sell, especially once I saw this little reaction and this sort of failure to go any higher over here. So and especially on 3 minutes, there was a very sharp reversal. So that's when I got interested. But the one thing I have to keep in note, which I did not really keep in mind at that time, was the order books for this are really thin and really illiquid. And we can see here that, for example, there was one trade made in 4 minutes, right? So this is not something I'm used to, as I mostly do Forex, and also even Bitcoin is much more liquid. So even though the price action looks like a sharp reversal, it's very easy for some player to manipulate, or at least move the market. Not necessarily manipulate, it's just very easy for a player to move the market on this 3 minute in a 3 minute time frame from this price to this price. So I guess I should have been a bit more wary of that, but I was not. I did not. That did not hit me at that time. So I was interested in this sell, but I was aware that buyers were actually looking quite strong recently. So my take profit thinking was, that's going to be my take profit 1 in case it ranges, but I thought this is unlikely because I was expecting a very sharp reaction down by the sellers. So I thought that was unlikely. My most likely scenario was take profit 2, remove most of my positions over here, because this is where the buyers have really started getting strong, and this is looking like a very good level of support, which was previously acting as resistance and support, and that has good price history over here. And my most optimistic target was all the way to the recent lows. So after the trade, I hit the trade. Once I saw this reaction by the sellers, sell push down, buy come up, sell push down, does not break this low at all. Buy comes up and sell is starting to come down. Around this area is when I thought, I do not like this reaction by sellers. I think this is looking more like a pullback for this big buy up, for the sellers to get some buy liquidity around this blue line before making higher highs instead of going much lower. So around this area, I thought, let me exit at this blue line over here. So I had set my take profit orders at this blue line and just move my stops down a little bit lower. But I keep a mental stop loss for cryptocurrencies because they are very, very vulnerable to spikes, as smaller players can manipulate or at least move the market in this market. So once price actually came down and started coming up really strongly, that's when I thought, let me just exit, because this is not a good trade to be in, and I exited right at that blue line over here. Later on, we see that price did actually come down close to the area I expected it to, but I thought it was a good decision to just limit my risk and cut the trade over there and even squeeze some profit out. And later on, indeed, we see that price did make even higher highs. So that's all for this trade. It was a trade that was a bit aggressive, and I guess also the logic was not that clear, especially with an illiquid market, because I may have given too much importance to this reversal over here, when in fact this reversal could have been easily created by smaller players in a 3 minute time frame for this really illiquid pair. So that's all for now. Thanks, and comments and questions are very much welcome.